Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in Chapter 13 bankruptcies right now are absolutely skyrocketing, probably a result of unaffordability, inflation, stock market losses, being stuck in investments, maybe the crypto meltdown, poorly leveraged investors. But one thing is for sure is Chapter 13 specifically, bankruptcy is surging. So what we'll do today, guys, is look at actual stats comparing to how we ended 2022 compared to 2021. So we're going to look at actual data from the United States courts. So we're going to analyze that. Then I'm going to kind of explain why the Chapter 13 bankruptcies are spiking. I'm also going to explain what a Chapter 13 bankruptcy is exactly. And then I'm going to show you guys just briefly how many businesses right now are filing for bankruptcy protection. So again, huge red flags anytime we see specifically Chapter 13 bankruptcy surge, even Chapter 7 obviously surge. It's a huge red flag. It means that people are starting to suffer, things are starting to break. But remember, you guys, I'm not a financial advisor, even if I want to be, even though I am a realtor, loan officer, and instructor in real estate in the great state of Texas. So if you guys can, please understand that and like this video, please, guys. Please seriously like the video, subscribe if you haven't already, hit notifications, and shoot me a comment below. But either way, guys, let's jump into the article right now. All right, guys, so the name of this article is Bankruptcy Filings Drop 6.3%. But hold up. What bankruptcies dropped 6.3%? This is a very misleading title because I'm not talking about this type of bankruptcy. I want to go into Chapter 13 bankruptcy, but this is the name of the article, guys, and it will be linked in my description. Now let's read some of this. Bankruptcy filings fell 6.3% for the 12-month period ending December 21st, 2022, continuing a fall that coincided with the start of the COVID-19 pandemic. But here's the thing that predominantly has to do with Chapter 7 bankruptcy. Annual bankruptcy filings in the calendar year of 2022 totaled 387,000 compared to 413,000 in 2021. Now, business filings fell. Look at this. Take a look at this. Business filings did fall 6%. Okay. But again, this is only to December. This is not taking into account January and February. And I'm going to pull up some articles to show you businesses are actually filing a whole bunch of bankruptcies right now. But this is just comparing end of 2022 versus end of 2021. So overall, it did follow. But take a look at this, guys. Let's read this juicy little tidbit right here, because this is the really, really eye-opening thing about what's happening right now as far as Chapter 13, Chapter 11 bankruptcies, as a result of unaffordability and the things that I listed at the beginning of the video. But filings for Chapter 11 and 13 both increased in the year ending December 31st, 2022. Chapter 11, which provides for reorganization, usually involves a corporation, increased 1.7% to 4,900 compared to the previous year of 4,800. So again, Chapter 11 is mainly for corporations, right? So Chapter 11 is mainly for corporation or businesses. Now, Chapter 13, here's the wild part, you guys. Chapter 13 filings increased. Look at this, increased 30.9% in 1 year. And it's not even counting January and February, you guys. 30.9% increase in Chapter 13 bankruptcies. And again, I'm going to define what a Chapter 13 bankruptcy is and why that is actually going up. But the total unit went from 120,000 to 157,000 year ending 2022. Now, obviously, guys, that is freaking crazy. That is absolutely substantial. It is what it is. But here's interesting business and non-business filings years ending December 31st, 2018 to 2022. Really interesting to note here, guys. So this is comparing kind of the year-over-year growth. And here's Chapter 13 right here. Look at this. So that's Chapter 13. Here's Chapter 11 corporations. So, here we can see we are going up. Now, last time we were here, you guys, obviously, so normal Chapter 13 bankruptcy filings right here. Okay, that's pre-COVID right here. Okay, so that's normal Chapter 13, which, the fact that we went up from here to here, so from here to here, 30%. Okay. It's still not pre-pandemic, but it's huge. And why is that huge, you guys? Because we just got a ton of money, the money printing, PPP, EIDL, stimulus. How are businesses going bankrupt right now? Well, I know how. It's quantitative tightening. But my point is it's going to take some time. And I believe 2023, we're going to see this continued trend of skyrocketing Chapter 13 bankruptcies. Let me jump into another article right now just so we get a better idea of why these Chapter 13 bankruptcies are skyrocketing like this. So I'm going to pull up this article, and again, you guys, this will be referenced in my description. So I'm just going to start here. I'm going to read 2 paragraphs of this. The narrative changed in 2022 with inflation skyrocketing. Mortgage interest rates have surged to their highest level since 2002. This has created a new difficulty with millions of Americans still recovering from the fallout of the pandemic and needing assistance with their loans. The challenge becomes how can a borrower in distress be offered a loan modification that can modify their loan to payment that the borrower can afford with high interest rates that may cause the payment to go up. Now, typically the answer is to help a borrower stay in their home and avoid foreclosure. They basically file Chapter 13 bankruptcy. So the advantage of the Chapter 13 bankruptcy is you don't lose your house, okay? A payment plan is made, a restructure given. So it's a kind of an alternative per se to loan modification. Some of the things that they're able to do is add the delinquent payments to the loan amount, extend the term like to a 40-year, and adjust the interest rate on the mortgage to the current market rate. But because today's interest rates are rising, a loan modification may no longer be the pathway to home retention. So again, you guys, Chapter 13 may be done in lieu of loan modification and can achieve some of the same results. Loan modifications are particularly attractive for borrowers when interest rates are low because the borrower can obtain a lower monthly payment. However, when interest rates are higher, a loan modification may not be the answer the borrower is hoping for. So even though loan modification is so effective, now that rates are higher, it's probably not going to be as effective. Due to servicer and federal guidelines, some lenders are not able to approve modifications if the principal and interest payment is increased beyond a certain amount. So again, one of the primary reasons we're seeing Chapter 13 bankruptcies skyrocket, obviously there's many reasons, but one primary reason is loan modifications are not working in a sense that they're, when someone goes into a loan modification, they may not be approved for a loan modification, and the loan modification may not be able to reduce their payment enough for it to become affordable. So instead of going into foreclosure, Chapter 13 bankruptcy is filed, protecting them from losing their house to the lender. Now, once that's done, a repayment plan is made that they essentially have to pay, right? But let me show you guys the actual definition of a Chapter 13 bankruptcy now. We're going back to the United States court here just to get a background on the Chapter 13 bankruptcy, kind of in their words. Now, a Chapter 13 bankruptcy is also called a wage earners plan. It enables individuals with regular income to develop a plan to repay all or part of their debts. Under this chapter, debtors propose a repayment plan to make installments to creditors over 3 to 5 years. If the debtor's current monthly income is less than the appropriate state median, the plan will be for 3 years unless the court approves a longer period. If the debtor's current monthly payment is greater than the acceptable state median, plan generally must be for 5 years. In no case may a plan provide for payments over a period longer than 5 years. So you have a 5-year repayment plan, 3 years if you're under the median income, which is very interesting. So again, the Chapter 13s are being done in lieu of foreclosure most of the time. Now, a Chapter 7 bankruptcy is basically something that you just walk away from all your debt. If you walk away from all your debt, you also lose all of your collateral, right? So if I do a Chapter 7 bankruptcy on an auto loan debt, I also have to give back my car. But a Chapter 7 bankruptcy is just you get to walk away completely from all of your debt as long as you're approved through court, and you get to start life over again. Now, the chapter bankruptcy that I did was a Chapter 7. So I did a Chapter 7. I walked away from all my debt. Destroyed my situation for 9 years in my personal situation. If I would have done a Chapter 13, it may have allowed me to stay in my house for a lot longer. It may have allowed me to catch up, but I lost all of my income. So It didn't make sense for me to do a Chapter 13 in the past because I had no income. I couldn't afford to pay any plan whatsoever because I had no money coming in. So essentially, guys, those are the two differences in a 7 and a 13. The 13s are skyrocketing, but let me show you, let's take a look at some articles across the internet, recent articles, just so I can show you how many businesses are actually filing for bankruptcy protection. All right, guys, so I just typed in business bankruptcy in Google, and we can see multiple companies are filing bankruptcies. Look at this, Corner Bankruptcy. Also Tuesday Morning, I don't know if I used to shop at Tuesday Morning, bankrupt, okay? Corner Bakery, bankrupt. Look at subprime auto lender shuts down business. We have a huge subprime auto lending bubble busting meltdown going on, which I believe is going to be a catalyst as well in our housing market, or the potential to be a black swan. Anything in consumer debt, really. Look at another health company files for Chapter 13 bankruptcies as well. Bally Sports looks like so Bally Sports inches closer to bankruptcy. Cineworld shareholders set to be wiped out as firm exits bankruptcy. So if you invest in these companies, and they go in bankrupt, they're essentially protecting themselves from you, right? So they don't have to pay you back if you have stocks in their company per se, depending on the court and whatnot. But just putting it in perspective, you guys. So Golden Knights TV looks like almost went into bankruptcy. Bankruptcies climb as pandemic aid vanishes. Subprime automaker again. Golden Knights, and just go through this, guys. Oh my gosh, Bed Bath & Beyond, obviously staring into bankruptcy as well. I was hoping to find that Tuesday Morning article to show you guys. Pharmaceutical company, or Akron announces bankruptcy, lays off hundreds. Again, another Bed Bath & Beyond. New Florida property insurance company picks up nearly 200 homeowners from insolvent companies. So it looks like companies are going bankrupt in Florida, insurance companies as well. Probably a result of people wanting to escape that state. So in other words, you guys, go through here. Cineworld, again, we talked about that. I don't know if you guys know this. Avia files for Chapter 11 bankruptcy, but just go through here. Very interesting to kind of see what's going on in the bank. Party City, you guys, look at Party City stores closely following bankruptcy filing. So even Party City, unreal, right? I mean, these are like some childhood, I remember some of these companies from childhood, and it's pretty astonishing to see that they're going bankrupt, right? Obviously, quantitative tightening, the inflation, the unaffordability. We have systematic failure that is about to happen that people aren't even calculating. And one of those things is bankruptcies, right? Obviously, as a result of closing down businesses, quantitative tightening and things like that. But regardless, skyrocketing bankruptcies like that, especially Chapter 13, is a huge red flag and telling us how just unaffordable things are acting. In conclusion, this is just another data trend to watch. So if you're impatiently waiting on the sidelines, and I know there's plenty of people that are impatient, understand we have so many red flags right now, and a potential catalyst is going to be the bankruptcies, a catalyst to continue price crash. There's many catalysts. And also, like that pointed out when we're going through the articles, a black swan event could be from the auto loan sector, could be from consumer credit cards, could be from commercial debt. We got a lot of black swans out there just waiting to come into our reality to crush us. So again, tread lightly, you guys. But either way, I really hope this provided you guys with some new insights, value, and perspective. And if you're out there investing in real estate, I wish you luck, and I hope you win.